in the coming week, the calendar seems to be getting busier. On the monetary front, we note the BOJ's interest rate decision on Thursday. In terms of financial releases, we make a start on Tuesday with Sweden's preliminary GDP rate for Q3 and the US JOLTS job openings figure for September. On Wednesday, we note Australia's CPI rates and France's preliminary GDP rate, both for Q3. Switzerland's COF indicator for October, the Czech Republic's, Germany's, and the Eurozone's preliminary GDP rates for Q3, the US ADP national employment figure for October, the US preliminary GDP rate for Q3, and Germany's preliminary HICP rate for October. On Thursday, we note Japan's preliminary industrial output rate for September, Australia's retail sales rate, China's NBS manufacturing PMI figure, France's and the Eurozone's preliminary CPI and HICP rates, respectively, all for October, followed by the US core PCE rates for September, the US weekly initial jobless claims figure, Canada's GDP rate for August, and New Zealand's unemployment rate for Q3. Lastly, on Friday, we get China's Caixin manufacturing PMI figure, Switzerland's CPI rate, the UK's manufacturing PMI figure, the US employment data, Canada's manufacturing PMI figure, and the US ISM manufacturing PMI figure, all for the month of October. The main factor behind the USD's movement in the past week may have been the Fed's monetary policy once again. Fed policymakers continued to cast doubt on the market's expectations for 2 more rate cuts by the bank by the end of the year, which may have aided the greenback. On a macroeconomic level, next week is going to be a roller coaster ride for dollar traders. In particular, we have the US employment data for October, the preliminary GDP rate for Q3, and the core PCE rates for September, which are the Fed's favorite tool for measuring inflationary pressures. Overall, should the financial releases showcase a resilient US economy or persistent inflationary pressures, it may provide with the Fed some leeway to withhold from aggressively cutting interest rates. In turn, this may aid the dollar as the 2 rate cut expectations by market participants may be reduced. Whereas, should cracks appear in the US economy's armor, it may increase pressure on the Fed to cut interest rates further, which may weigh on the dollar. On a fundamental level, we are less than 14 days away from the US presidential elections. The race is still too close to call, and thus we may see increased volatility in the markets if one candidate manages to take a clear lead in key swing states. In our opinion, we would like to note that we remain vigilant to other factors that may influence the dollar, other than the Fed, as election season nears. Moreover, financial releases stemming from the US next week could lead to a roller coaster ride for the greenback, and thus we would approach next week by focusing on 1 day at a time. Economic data shook the pound in the past 3 days. The UK's preliminary composite, services and manufacturing PMI figures for October came in lower than expected. The lower than expected PMI figures may imply that the UK economy is not as resilient, and thus may have aided to the pound's weakening this week. In terms of financial releases next week, we note no major financial releases stemming from the UK. In our opinion, despite the preliminary PMI figures remaining above contraction territory, we remain concerned about the resiliency of the UK economy. Moreover, with inflation at 1.7%, which is below the bank's 2% inflation target, we would not be surprised to see further BOE policymakers in the coming week adopt a more dovish tone. On a monetary level, BOE Governor Bailey, according to the FT, stated earlier on this week that he was seeing, quote, a good story in regards to slowing down headline inflation rates. In turn, the apparent comment that progress has been made in combating inflation pressures in the UK economy may increase pressure on the BOE to continue on its rate-cutting cycle and potentially act even more aggressively, which could weigh on the pound. For Japan, on a monetary policy level, we highlight the comments made by BOJ Governor Ueda earlier on this week, who hinted that more rate hikes are to come. Essentially, BOJ Governor Ueda appears to be concerned as to which path would be the best for the bank to continue hiking interest rates, and in his own words stated that, quote, if you proceed very gradually and create the expectation that rates are going to stay at low levels for a very long period, this could lead to a build-up of huge speculative positions, which could become a problem later, end quote. In conclusion, BOJ Governor Ueda's comments may be perceived as hawkish in nature, which in turn may aid the JPY. In our view, the BOJ's interest rate decision next week may take the markets by surprise, despite JPY OIS currently implying an 83.8% probability for the bank to remain on hold. We remain concerned about the comments made by BOJ Governor Ueda, and in particular, the concerns about creating expectations that rates are going to stay at low levels for a very long period. Hence, we would not be surprised if the BOJ opts for a surprise rate hike in their next meeting. For the Eurozone, on a monetary policy level, ECB President Lagarde earlier on this week stated that, quote, the direction of travel is clear, end quote, when referring to the ECB's monetary policy path, which may imply that the bank may continue on its rate-cutting cycle. Moreover, ECB Chief Economist Lane's comments appear to have echoed that of ECB President Lagarde's overall implied rhetoric that the current economic conditions may be favorable for the bank to maintain its monetary policy approach of cutting interest rates. In turn, the relatively overall dovish sentiment may have weighed on the common currency. In our view, the euro will be put to the test next week with the GDP and HICP rates taking the stage for euro traders. In particular, we'd like to focus on the inflation print, which, should it fail to slow down or remains relatively unchanged, it may increase pressure on the ECB to ease off the rate cutting cycle. We tend to view the HICP rate as crucial, as should inflation pressures in the zone fail to tick down, it could cast doubt, and we may see concerns emerging that the ECB may have been premature in cutting interest rates. On a macroeconomic level, Australia's preliminary manufacturing PMI figure for October was released yesterday. Specifically, the figure came in at 46.6, which is lower than the last month's figure of 46.7, and tends to imply a further contraction of the manufacturing sector, and thus may have aided to the Aussie's weakening this week. Nonetheless, interest may pick up next week with the release of Australia's CPI rate for Q3. Should the CPI rate showcase easing inflationary pressures in the Australian economy, it may increase pressure on the RBA to pivot towards a more dovish stance in their next meeting, which may weigh on the Australian dollar. Whereas a hotter than expected inflation print could sway the RBA to consider a rate hike, which instead could aid the Australian dollar. On a monetary level, we note the comments made by RBA Deputy Governor Hauser earlier on this week, who appears to have echoed the hawkish remarks from RBA Assistant Governor Hunter last week that inflation is, quote, still too high, end quote, in the Australian economy. In turn, should further RBA policymakers echo that hawkish rhetoric that appears to be emerging from the RBA, it could aid the AUD. In our opinion, the RBA has kept the door open for either a rate cut or a rate hike during their last monetary policy meeting. As such, with the recent RBA policymakers stating that inflation remains too high, the release of the CPI rate next week may be a pivot moment for RBA policymakers in terms of their next monetary policy decision in November. Yet, given other financial releases, and in particular those from the US, it could overshadow the release of Australia's CPI rates. The main factor affecting the loonie in the past few days may have been the release of the BOC's interest rate decision, in which the bank cut interest rates by 50 basis points, as it was widely expected. In the bank's accompanying statement, it was stated that, quote, if the economy evolves broadly in line with our latest forecast, we expect to reduce the policy rate further, end quote, essentially implying that the bank will continue on its monetary easing cycle, which in turn may weigh on the loonie. On a macroeconomics perspective, we would like to note for loonie traders the release of Canada's manufacturing PMI figure for October next Friday. Should the PMI figure coming in higher than last month's figure of 50.4, it may aid the loonie and vice versa. On a fundamental level, we note that Prime Minister Justin Trudeau has been given a deadline to step down by the 28th of October, following a letter signed by 20 lawmakers who called on the Prime Minister to step down. There are 153 Liberal members of the Parliament, which may imply that the calls for the PM to step down may lack widespread support. Therefore, should the Prime Minister step down, the political uncertainty that could ensue could weigh on the CAD. In our view, the BOC cut interest rates as was expected, and with the comments made by the bank, we would not be surprised to see the BOC continue on its monetary easing cycle. Our interest currently is the possibility of a political mutiny against the Prime Minister, who is 19 points behind his Conservative rival in a CBC poll tracker. We would not be surprised to see division within the PM's party, which in turn could lead to political instability in Canada, which could weigh on the country's currency. As a closing comment, we remain concerned about the high number of fundamental issues tantalizing the markets. The high number and important financial releases from the US, EU and Japan could heavily increase volatility in the markets. Hence, we tend to maintain the view that the markets may remain extremely sensitive and possibly overreact from one financial release to the other. In the coming week, we expect the US dollar to regain some of the initiative in the FX market, given that the gravity and frequency of US financial data is set to increase. As for US stock markets, the earnings season is in full swing, creating headlines and catching market participants' attention. In the coming week, we'd like to note the earnings releases of Visa, Pfizer, McDonald's and Google, and also Airbus, Meta, Microsoft, eBay. We also get Intel, MasterCard, Amazon and Apple. And lastly, on Friday, we get ExxonMobil. As for gold, we note that the negative correlation of the precious metals price with the USD continues to be inactive, as both trading instruments edged higher for the week, with gold touching new record highs. Fundamentals leading the precious metal may include a number of uncertainties on a geopolitical level, providing support for gold. And we may see from all of us here at IronFX. Thanks for tuning in.
Okay, let's go ahead and get started. So as per usual, a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you fully understand the risk involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. I'm Melanie, and I will be a speaker for today. I'm an investment analyst at Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. Here's our agenda for today. We're going to start off by talking about some fundamental trading strategies. Then we'll talk about the top 10 cryptos, what their value propositions are, where you can keep up to date on their developments, and trading their cryptocurrencies. Okay, so let's go ahead and get started. So one of the first mistakes that people have when it comes to fundamental trading is not having a trading plan. So having a trading plan is important for a couple of reasons. Firstly is consistency. So a trading plan helps you to maintain consistency in your trading approach. It outlines your trading strategy, including your entry and exit criteria, risk management rules, and position sizing. So by following a well-defined plan, you're less likely to make impulsive decisions based on emotions or market noise. Consistency is crucial for long-term success in trading, as you would know. So having a well-defined trading plan helps you to maintain that. Next is objective decision making. So a trading plan provides a framework for making objective decisions. So it helps you to define specific criteria for entering and exiting trades based on technical or fundamental analysis. So this kind of eliminates the guesswork and emotional biases that you might have when it comes to trading and allows you to make more rational decisions based on your predetermined rules. Number 3, risk management. So we'll go through a couple of risk management tools in a little bit, but risk management basically is really important, as you would know, since it helps you to protect your capital. So having a trading plan that incorporates your risk management basically outlines how much risk you are willing to take on with each trade, where to set your stop loss orders, and when to take profits. So by implementing proper risk management techniques, you can limit your potential losses and preserve your trading capital. Next is focus and discipline. So a trading plan keeps you focused on your focused on your trading goals and prevents distractions. So it helps you to avoid impulsive trades, and chasing after hot tips. So following a plan requires discipline and adherence to the rules that you've set for yourself, and this discipline is essential for overcoming the emotional challenges that come with trading. Evaluation and improvement, that's pretty straightforward, I think. Basically, keeping a record of your trades and comparing them with your plan can help you to identify any strengths and weaknesses in your trading strategy. So this can allow you to continuously improve your trading approach over time. And lastly is confidence. So a well-defined trading plan gives you confidence in your trading decisions. So with a structured framework and a set of rules to follow, it can help you to reduce uncertainty and anxiety. And obviously increase your confidence as well. So you're more likely to stick to it during challenging market conditions and avoid making impulsive or emotional decisions. Another mistake that some people have is not having a risk management strategy, which we mentioned earlier. So one of the most basic risk management strategies that we follow is proper stop loss and take profit placement. So the proper stop loss and take profit placement is important to ensure that you maximize your wins and minimize your losses. So your stop loss should be placed beyond your resistance area, while your take profit should be placed before. Okay, so in this example, you can see we're going in for a sell, which is why our take profit is placed below. So here in this image, right at the bottom, you can see that's a scenario where we're going in for a buy. So your buy entry, we're going in for buy, we'll place our take profit on top, but below your confluence. Fibonacci confluence will be placed, your stop loss will be placed below that. So it's basically the opposite. So the reasoning behind this stop loss and take profit placement, let's start off with a stop loss is basically that you should always put your stop loss beyond a key Fibonacci confluence area. And when we say Fibonacci confluence area, we are talking about areas where two or more Fibonacci levels line up. But even more important than that, this applies for any major resistance areas. So it could be like your pullback overlap areas, Fibonacci of even your pivot point levels. As long as you have a strong resistance area, this applies as well. So the reason for this is because more often than not, price tends to get attracted to such strong areas of confluence. And if your stop loss is right before instead of beyond it, you'll most likely get stopped out before your market reverses. So that's also one of the reasons why most people wonder why they got stopped out right when the market starts to reverse, and then they start complaining about stop hunting. Next is your take profit should be placed before, which means that you should always place your profit target before a key resistance or confluence area. Reason for this is because when price reaches that confluence area, there's a high chance that it won't be able to go beyond it. So instead of reaching your profit target, it reverses back to your entry, or even worse, your stop loss. And this is one of the reasons why people complain that the market is being manipulated, because they missed the take profit by 1 pip. So here's another risk management strategy, which is break even. And break even in trading basically refers to the point at which a trader reaches a level where he has neither made a profit nor suffered a loss. So it's the point where the cost of the trade, including fees and commissions, is equal to the price at which the trade was executed. So for example, if a trader buys a stock at $100 and sells it at $110, the trader has made a profit of $10. On the other hand, if the trader buys a stock at 100 and sells it at 90, the trader has suffered a loss of $10. So in this example that I'm giving you guys, we're talking about stocks, but this applies for any kind of trading, any kind of security or asset as well. So if the stock is sold at $100, since that's the price that he bought, he has neither made a profit nor suffered a loss and has reached its break-even point. So that's kind of the idea behind it. So what does it mean when it comes to trading? So it's basically the level where you are in profit and recognize that there is a risk of reversal back to your entry. So here we have an entry at the breakout of the multiple swing high resistance level, where we are hoping for price to push to our take profit. So take note of our original stop loss at number 2, and that's in line with a swing low support. At point 3, price reaches our break-even level and reverses off of it. Hence, we move our stop loss to the entry to protect our position. So if price continues to our position, that's great. As in, if it continues moving to our take profit, then that's obviously a good sign. But if it reverses back to our entry, we want to be protected. So here we can see price has broken above the break even, but quickly reversed and hit our stop loss. Okay, so another risk management strategy is partial profit. So partial profits basically refers to the practice of closing only a portion of a trade when it reaches a certain profit target, while leaving the remaining position open in order to potentially capture further gains. So the idea behind partial profits is to lock in some of the gains while giving the remaining position room to potentially continue to move in the desired direction. So, for example, if we go back to that example of stocks, so if a trader buys 100 shares of a stock at $100 and the stock rises to 110, the trader might choose to sell only 50 shares, taking a partial profit of $500, and the trader would then still have 50 shares that are now worth 550. So then he could potentially continue to make profits if the stock price continues to rise. So this basically is typically used when there is a strong resistance area and you are kind of unsure if prices will continue to rise to your take profit. So that's kind of the idea behind this risk management strategy. Okay, so here's our partial profit example. Here you can see that we have a pretty strong resistance area at our partial profit that's in line with 38.2 Fibonacci retracement and a 78.6% Fibonacci projection. Okay, so we're unsure so our first support here is our buy entry, and we're expecting prices to rise to our take profit. But there is a strong resistance at the Fibonacci confluence area, which is this level that we mentioned earlier. So we're unsure if prices are going to be able to push past it. Okay, so as a matter of fact, price reacted off that strong resistance area at our partial profit and reversed off of it instead of heading to our take profit. Okay, so you can see we got out of that trade before prices started heading back downwards and we got out with a partial profit. Okay, let's look at our break-even placement example now. So in this example, our entry is in line with a 100% Fibonacci projection level. Prices currently are moving towards it, and we're expecting prices to reverse of our entry and hit towards our take profit. So now we go in with a couple of Fibonacci levels, and we notice that there is a Fibonacci confluence area right in the middle between our entry and our take profit. So this level is in line with a 23.6 retracement and the 30.2 retracement as well. So this confluence area, we're unsure if prices are going to be able to push past it towards our take profit. And it's also the level that we've identified where prices are where we would make a break even. So you can see prices have now reached our break even. So what we do is move our stop loss adjust to our entry to minimize losses, and so that we prepare ourselves for this in the event that this happens, which basically prices are not able to push past our break even and prices reverse off of it and hit towards our stop loss. Okay. Let's talk about idea invalidation now. So idea invalidation basically is another risk management strategy. Let's start off by talking about what it is first. So in trading, the idea of invalidation basically refers to the process of evaluating a potential trade idea and determining if it should be disregarded or acted upon. So essentially, it's a way of determining if a trade idea still holds up in light of new information or market conditions. So here's how the process of idea invalidation typically works in trading. Firstly, you have the initial trade idea. So the trader has kind of an initial idea about potential trade based on the analysis of the market conditions, technical indicators, etc. And then followed by the evaluation of the idea. So looking at the current market conditions and other relevant info like economic data, you then determine if the initial trade idea still holds. Then you come up with your invalidation criteria. So the trader then establishes criteria for invalidating the trade idea, such as specific price levels or market conditions that would cause them to reconsider the trade. Next is monitoring. So you'll just monitor the market to see if the invalidation criteria are met. And lastly would be invalidation. So if the invalidation criteria are met, the trader will then choose to exit the trade or adjust their position. On the other hand, if the criteria are not met, the trader may continue to hold the position or add to it. So it's basically a crucial step in a trading process that helps traders make informed decisions about their trades and avoid potential losses. Okay, so idea invalidation is usually placed before your stop loss, and it's the level which you basically admit that you're wrong and that you want to get out of the trade ASAP. So when the level is reached, your take profit is moved to your entry, giving you a small chance to get out at break even. So you can see in this example, we have point number one which is at our entry. Okay, and our idea invalidation is placed at this swing high level here, just below our stop loss. Our original take profit is placed before this support level with 3 swing lows, and we have a modified take profit once price breaks above our entry. You can see breaking above, and it triggers our idea invalidation. So earlier I mentioned our idea invalidation criteria. So that's basically what it looks like in the form when we are using it in technical analysis. So our idea invalidation here is the swing high, and prices have triggered our idea invalidation, which is why we've modified our take profit and we're moving it back to our entry. Okay, so if prices continue moving upwards, obviously your goods stopped out, but you are hoping that with prices, or rather with our take profit moving up to our entry, you're hoping that this gets us out of a losing trade. Okay, so this is what it'll look like in an actual chart. Okay, this slide first. So you can see here, we are starting off with our entry, with prices heading towards our entry at the swing low. We've then placed our take profit at this overlap level that's in line with a 50% retracement. Okay, and you can see here the 50%, we have two 50% retracements that line up with our take profit. And we also have a 127.2 extension level that lines up with the minus 27.2 expansion level as well. And that's also in line, sort of in line with this swing low here. I mean, it's kind of beyond it. Okay, so we are expecting prices to bounce off of our entry and hit towards our take profit. Okay, but we've placed our stop loss below this confluence area, and we're placing our idea invalidation right on that confluence area. So that kind of forms our idea invalidation criteria. Okay, so prices do approach our entry, but they don't bounce off, and instead they break past it and hit towards our stop loss. Okay, so once our idea invalidation criteria is triggered, our take profit is then moved to the entry so that you get out of your trade ASAP. And you can see that's exactly what happened here. So we got out at break even. Okay, so it's a good thing that this happened, otherwise price would have stopped us out. Are there any questions so far? Okay, if there are no questions, let's go ahead and continue. So the next method that we're going to be talking about is your trailing stop loss. So trailing stop loss is basically a type of stop loss order that is set a certain percentage or dollar amount away from the market price. So the idea behind a trailing stop loss is to lock in profits while giving the trade room to breathe, as the stop loss follows the market price as it moves in favor of the trade. So going back to that example, let's say you buy a stock at $100 and you set a trading stop loss at $10. So as the stock price rises to 110, the stop loss will follow, now at 110. Oh, sorry, not now at $100. So if the stock price drops to $100, your stop loss will be triggered, selling your position and protecting your profits. So the trailing stop loss technique can be useful tool for traders because it allows them to manage risk and lock in profits dynamically as the market moves. So this is different from a fixed stop loss, which is set at a specific price and does not change as the market moves. So it's important to note that the trading stop loss is not a guarantee that you will exit a trade at your desired price. It's just due to market conditions, it can trigger a stop loss order before it reaches your desired level, leading to an unexpected exit from the trade. So here are the different methods of trading stop loss that we're going to be covering today. First is our moving average. We have parabolic SAR, chandelier, ATR, support and resistance levels, and a combination of these methods. Okay, so let's get through them. Firstly, in this example, we are using our moving average. Our sell entry starts when prices break out of this ascending trend line, and also out of this overlap level. Okay, you can kind of see it breaking below this moving average as well. So now prices are moving below our moving average, and our trading stop loss is triggered over here. Okay, so trading stop loss is triggered, prices moving above our moving average, and we got out of the trade. Okay, so it got us out before this happened, before prices started to rise, back to our entry. Another example is our trend line breakout. So here we have prices moving in. It's the same example, okay? We're just using different methods on the same chart. So here we have prices moving below our descending trend line. So again, similar idea. Once prices break out of that trend line, then we get out of the trade. Parabolic saw, you can see it's pretty much the same idea as well, with prices moving below your parabolic saw. That's also a signal that prices are moving in a bearish momentum. And once prices kind of break above it, that's a sign that the trend has changed. So got us out before the change in trend as well. Chandelier and ATR. So we have prices moving below. Kind of that same idea. Once it moves above, your ATR stop is triggered and your chandelier stop is also triggered. Okay. Are there any questions? Okay, let's talk about, let's do another example. So here we have a support and resistance levels. So we're going in for a sell entry. As you can see, prices breaking below that ascending trend line here. Okay, so prices are breaking below it, so we're going in for our sell entry towards our take profit below here. So we're going in with moving average. Prices are moving below the indicator, which is a bearish signal. Okay, and we got out at take profit before prices started to rise again. So here's just a very simple example of how you can combine your indicators with your support and resistance levels. Okay? Okay, so now let's talk a bit about what exactly is the FX News calendar. So it basically allows traders to see at one glance all important economic data releases, and it shows you key events such as your GDP, CPI, NFP, crude oil inventories, and even central bank's monetary policy meetings. So we have a few examples here of FX News calendars. On the left, we have investing.com, and on the right, we have forexfactory.com. So let's go through a few high impact events to understand what they mean and how they can impact the markets. We've gone through some technical strategies already, so it's important to be able to combine those with our fundamental events as well. So firstly, we have our FOMC meetings. The FOMC is your Federal Open Market Committee, and this is the US Fed's way of communicating their view on monetary policies. Next, we have the Fed interest rate decision that comes together with these meetings. So if the Fed is dovish, the USD is bearish. If the Fed is hawkish, the USD is bullish. If interest rate goes up, the USD is bullish, and if interest rate goes down, the USD is bearish. Okay, some employment data. If NFP is basically your non-farm payroll, this measures the change in citizens that are employed from the previous month, excluding the farming industry. And unemployment measures the total unemployment of workforce that is seeking active employment from the previous month. Crude oil inventories, these measure the weekly change in the amount of crude held by US firms. If crude inventories increase, oil prices should drop. EIA admin is a short-term outlook, the monthly forecast for the year ahead, demand and prices across major fuel types. Okay, some benefits basically, depending on your individual trading style, it helps you to plan and allocate trades for the day, week, or month ahead, helps to alert the individual to upcoming important news that might affect volatility. And yeah, so let's now jump into our crypto. So as of last year, in June, these were the top 10 cryptocurrencies. And this year, as of September, these are the top 10 cryptocurrencies based on market cap. So what are their value propositions? Basically lies in their unique characteristics and potential benefits compared to traditional forms of money and financial systems. Okay, so firstly, it would be your decentralization. Since it operates on decentralized networks, it provides individuals direct control over their funds and reduces the risk of censorship. Security and trust. It uses cryptographic techniques to ensure security and integrity. Also, because it's decentralized, it also offers varying degrees of privacy and anonymity. And borderless transactions. You're able to send and receive funds globally. And financial inclusion. So since these are decentralized, they don't rely on banks, So they have the potential to promote financial inclusion by providing access to financial services for the unbanked populations. Um, yeah, and some cryptos also support programmable smart contracts, which automate and enforce agreements as well. Okay, so of course, we all know the challenges and risks that exist, such as the volatility, the regulation, scalability, and environmental concerns. But of course, you can still keep up with crypto developments. And crypto Twitter, CoinGecko, which basically allows you to track activity rates and popularity of your favorite coins and tokens in one place. Project website is they usually have an attractive, user-friendly website that displays the features of the project. And news outlets, so you might be able to get some reputable crypto news outlets out there. Some form the backbone of what you see on crypto Twitter as well. Okay, so these are the most popular cryptocurrencies by far, by market cap. And how can you trade it? So you can trade it on traditional brokers such as your IronFX, crypto exchanges like Binance, Coinbase, and Kraken, and CFDs. So crypto coins, basically, there are a few differences between the coins and the CFDs. So crypto via exchanges provides access to other crypto services such as your DeFi and your NFTs. You can make cross-border payments without incurring third-party fees. Trading fees are often lower than traditional brokerages, but withdrawal fees are charged. You also have access to a wider range of cryptos, and exchanges are susceptible to hacks. CFDs, no withdrawal fees, and it allows traders to speculate on price movements of crypto without owning the underlying tokens. It also allows traders to capitalize on price movements without having to manage the process of securely buying and storing crypto tokens on exchanges or a ledger. Yeah, and you can open both long and short positions, and there's virtually no risk of attacks or hacks. Okay, let's go through some of the events for this week since we have time. Okay, so for today's, so we normally will look at forexfactory.com, but it's entirely up to you which economic calendar you wish to use. So this week, you can see I have it filtered only to look at the orange and red icons. And that basically is the medium to high impact events. But if you wish, you can also look at the yellow and gray icons, which are basically your low impact and non-economic events. So all of the events, oh, okay, oops, okay, thank you for letting me know. Okay, should be able to see now. So, okay, as I was saying, this is just forexfactory.com. Yep, thank you. Okay, yep, so you can change the calendar. It'll give you the really depends on your own trading strategy, but we normally just like to look at the upcoming week. So you can do that there. And you can see I have it filtered to only look at the orange and red icons, which I mentioned earlier are the medium and high impact events. If you click on this green icon, you can also look at the low impact and any non-economic events. So that will be your bank holidays. Event types, you can filter out any that you're not interested in or any currencies that you're not trading. I just prefer to look at all of them. And yeah, you can see that there are a lot of events to get through, which is why I normally just focus on the medium to high impact events. So for this week, on Monday, we had China's CPI and PPI. So both came out to be lower than forecasted. Tuesday, we have UK's, or yesterday, we had UK's claim count change, which was higher than forecasted. And average earnings index was lower than forecasted. And Canadian Gov Macklem speaks. Wednesday, which was today, UK's GDP came out to be lower than forecasted at 0.0%. And yeah, for the rest of today, we can expect US inflation data with the core CPI month-on-month and year-on-year data. Thursday, tomorrow, we will have US crude oil inventories, China's new loans data, Eurozone main refinancing rate, monetary policy statements, US core PPI, unemployment claims, and we have a ECB press conference as well. And in Switzerland, Chairman Jordan will be speaking on Friday, and the US 30-year bond auction will be happening as well. So, yep. We like Forex Factory because at one glance you can see all of the important news, especially the high and medium impact events. And you can also see the previous data, forecasted, and the actual data all at one glance. There are also some forums if you're interested in that. There are some news outlets as well. Yeah, there's some crypto forums as well in case you were curious on that. Yeah, I think that's kind of all I have for you guys for today. Um, yeah, if you guys have any questions, feel free to let me know in the chat. But if not, that's all for today. Thank you guys so much for joining me. I hope you guys found this session helpful, and I will see you guys again next week. Thanks, everyone. Bye.